Okay, let's unpack this. Imagine an ETF, right? One that offers really explosive potential. It's designed to amplify daily market moves, but it also carries equally intense risks, you know, prone to those sudden traumatic shifts. Today, we're diving deep into SOXL. That's the 3x leveraged semiconductor ETF. And we're exploring, well, what seems like a pretty critical juncture for it right now.
Yeah, it's fascinating. What's really striking here is SOXL's ultra high risk, ultra high reward nature. It's baked right in. I mean, we've seen it rocket up, what was it, 105% in just 3 months? But then you also see it plummet over 40% down in a single year. This isn't just, standard volatility. It really shows that amplification effect. Our sources really highlight this.
Absolutely. So our mission for you, listeners, to understand this sort of battleground around SOXL, specifically that critical $23 support level, and what the potential path might be, maybe up to $38. We're going to try and distill the key insights from our sources, give you a clear picture of, well, what's really at stake. Okay, so here's where it gets really interesting. SOXL isn't your average investment vehicle, not at all. It's specifically designed to give you 3 times the daily return of the underlying semiconductor index. 3 times. So this isn't some gradual climb we're talking about. It leads to these wild amplified swings. Like, remember that dramatic single-day drop, 22.5% down? That was August 2024. It really is, as you hear people say on Reddit and StockTwits, the semiconductor roller coaster.
And if you connect that to the bigger picture, I mean, you have this extreme leverage. Plus, it's got substantial assets, right? Around $12 billion under management. And you add in a high options implied volatility, 77%. Which basically signals the market expects really big price moves. Put it all together, and it fundamentally means it's suited for, well, short-term strategies, swing-focused trading, long-term holding. That carries significant risk. Our source IGNAS highlighted this well. It's due to something called compounding decay and also tracking errors. For anyone maybe newer to these leveraged ETFs, that compounding decay, it's tricky. It means even if the underlying index just goes sideways, doesn't move much overall, the constant daily rebalancing of the leveraged ETF can actually erode its value over time. It makes it a really tough, kind of brutal trap for buy and hold investors.
Right. So what does this all mean for you, the listener, maybe looking for some direction here? SOXL is currently trading around $26, give or take. But the real test, the sort of critical point, seems to be that $23 mark. Given all that volatility we just talked about, what makes that level, $23, so critical? Is it just technical, or are other factors lining up there too?
That's a great question. Because, yeah, it's not just some random number. Our sources suggest it's actually a convergence point. You've got strong historical support meeting specific technical indicators right there. So it raises the big question. Can SOXL hold $23? That's the key. Looking back, past patterns show that strong rallies often kick off after it successfully finds support at this level. So if it holds and certain conditions are met, like what our sources call trap resolution.
Trap resolution, what's that exactly?
Yeah, basically it means short positions getting covered. So people betting against it have to buy back shares. That turns potential selling pressure into buying momentum. And if you also see supply diffusion, meaning ownership is spread out more healthily, then the potential midterm target could maybe expand up towards $38, perhaps by early 2026. From an Elliott wave perspective, holding $23 would suggest the corrective wave 2 is done, and that sets the stage for a potentially powerful wave 3 upwards. That's typically the longest, strongest part of a trend, and it targets that $38 area. But the flip side is if it collapses below 23, that risks a much deeper correction, a significant drop.
Okay, so that's the technical picture. What about external forces? What kind of winds could, fuel this thing or maybe dampen it down? We know there are long-term tailwinds, right? AI, data center demand, it's huge for semiconductors generally, but SOXL being leveraged, that must mean it's super sensitive to broader stuff too, like shifts in interest rate expectations. Even small changes there could impact speculative money, right? Or news about U.S. chip subsidies or China export rules.
Exactly. Highly sensitive. But remember, these aren't just one-way streets. They cut both ways. We've actually seen significant capital outflow recently, about $3 billion in the last year alone. That indicates pretty unstable investor sentiment, as our sources put it. So this isn't a set it and forget it kind of investment.
Yeah.
Absolutely not. It demands constant monitoring. You have to keep a finger on the market's pulse, especially with SOXL's daily volatility. That capital outflow, for instance, that could be a real headwind. It might even challenge that whole Elliott wave idea if it keeps up.
So SOXL really is an amplified play, a kind of semiconductor firework maybe, explosive gains possible, but yet equally intense risks. And that $23 line, it isn't just a number on a chart. It really feels
Yeah.
like the critical fulcrum for whatever happens next.
Well said. And, knowledge is most valuable when you really understand it and can apply it. This deep dive, I hope, highlights that while SOXL is undeniably potent, navigating those amplified swings, or just knowing when maybe it's time to step back from the heat, that demands really keen attention to the market's rhythm and the underlying conditions. So thinking about all this, what stands out to you, the listener, about navigating this kind of high-stakes volatility?
Definitely something to mull over as you watch the markets. Until next time, keep diving deep.